Greetings again, traders, and welcome back. Today, we are going to look at the third category of the PT array matrix, which is the liquidity void. We have already studied two categories: the mitigation block, bullish and bearish, and the breaker block, bullish and bearish. Today, we are going to look at what a liquidity void is. A liquidity void, just like from its name, is a void that is formed in price action. Voids are simply gaps or emptiness. Now, I already informed you that the market runs or is run by an algorithm, okay, called IPTA. IPTA is simply the short form for the interbounds price delivery algorithm that was discovered by the founder of the smart money concept, Michael J. Hudson. All shout out to him. Now, he discovered that there are times IPTA is in a rush to deliver price. IPTA can be in a rush to deliver price, and it is going to run at a certain level of speed, aggressive speed, and by so doing, it often leaves gaps, okay? And sometimes this happens maybe during news impact events like the NFPs and the CPIs, and you see very huge candles of one-sided price delivery being formed. These are called voids or gaps, okay? And this is what we refer to as a liquidity void. Why? Because it is void in liquidity. I am going to explain this, don't worry. Now, if IPTA has only offered one-sided price delivery, let's say sell-side price delivery, it means it is void of what? Buy-side price delivery. Okay, so this is a liquidity void because it has only offered sell side price delivery. It needs to offer buy side price delivery to be able to balance this price action. So it is void of what? Of buy side price delivery because it has only offered sell side price delivery. I hope this is understood. Now, there is what we call in smart money concepts the market efficiency paradigm. A market efficiency paradigm is what the market runs entirely on, meaning sell side must equate buy side. There must be efficiency in price delivery. If only one-sided price delivery has been offered, IPTA, which is the interbank price delivery algorithm, is going to by far or by chance or is going to offer the opposing liquidity, okay, to be able to balance the one-sided price delivery that has been offered in the market. Hopefully you understand this. Now, in future, you are going to see it that offer what? Buy side price delivery to be able to balance with this sell side price delivery that has occurred in the market. Now, if we are defining this one-sided price delivery, which is a void, a liquidity void, we are defining it as what? A sell side imbalance and a buy side inefficiency, okay, because the market has only offered what? Sell side imbalance in price delivery, but it is inefficient in buy side price delivery. So IPTA is going in future to offer what? Buy side price delivery to be able to balance up this sell side imbalance that was delivered by IPTA because of a rush, okay. Now, sometimes if IPTA is in this rush to offer just one-sided price delivery, it is also what we call a hierarchy in institutional order flow, okay. Why? Because if IPTA wants to offer on the sell side, the first thing it's going to do is it's going to offer the sell side, and then it is going to come back afterward to offer buy side, okay. So hierarchy is going to be given to the sell side first, and then in return is going to be given to the buy side. So you see there's hierarchy here. Institutional order flow, that is hierarchy in institutional order flow. Institution where IPTA only offers one-sided price delivery first, and then in return it offers the opposing liquidity to balance it up, forming what we call what? The market efficiency paradigm, which means buy side must equate sell side and sell side must equate buy side. So if only sell side has been offered, it means it is void of buy side, and if only buy side has been offered, it means it is void of sell side. So in future, IPTA will have to offer the opposing side of the liquidity to balance up the market, so that what we call the market efficiency paradigm must be applied. I hope this is clear. So anytime you see on the sell side being delivered, it means it is a liquidity void. which means sell side has been delivered but it is void of buy side delivery. Okay, and anytime you see only buy side being delivered, it means it is a liquidity void. It is void of what? Sell side price delivery. And I already said that when we see only sell side being delivered, we call it what? A CB, sell side imbalance and buy side inefficiency. A situation where we only see buy side being delivered and no sell side, it is called what? A BC, buy side imbalance and sell side inefficiency. We are going to look at that. Please listen to that again. Okay, CB is sell side imbalance, buy side inefficiency, and BC is what? Buy side imbalance, sell side inefficiency. Why? Because IPTA has only offered one-sided price delivery, so it has to trade back or offer the opposing liquidity to be able to balance up the market to form what we call the market efficiency paradigm. I hope this is clear. So price must be efficiently delivered. That is the job of IPTA. Offer efficiency in price delivery and run for liquidity. I hope this is clear. Now let us look at the live market and see how this happened. Now you see this rectangle here. This is the current market. Okay, this rectangle here, just this drop where we only see this entire drop in sell side. This is a CB, okay, and this is a liquidity void, a sell side imbalance and a buy side inefficiency. In future, we want to see IPTA trade back over here to offer the opposing side of liquidity, which is what? Buy side. So we are anticipating that IPTA should trade back over here to fill this guy, okay, to offer buy side in price delivery, so that this level should be efficiently delivered. Otherwise, this price action is going to be inefficient in price delivery. Now let us look at some examples on our chart where IPTA created voids and then balanced them back up. You see this area where you see only one-sided price delivery from here to here, this is a liquidity void. Okay, why? It is void of what? Sell side price delivery. So we are anticipating that in future IPTA will have to trade back down here to balance up all of this buy side in price delivery that was offered, because less of sell side has been offered here, more of buy side has been offered. So this one is what? A liquidity void. Why is it a liquidity void? It is void of what? Sell side price delivery. I hope this is clear. Now look at this scenario here where IPTA only offered what? Buy side in price delivery. This was a liquidity void, right? Now a BC, okay, buy side imbalance, sell side inefficiency. Look at what happened in future. IPTA had to trade back here to balance it up. Okay, buy side was offered, sell side was not offered, so IPTA had to offer the opposing liquidity, which is what? Sell side price delivery, to balance it up, and then it took off from there. I hope you get the point. So anytime IPTA creates a liquidity void in the market, it is always going to refer back to that liquidity void to fill it, so that the market should be efficiently delivered. Okay, that's the job of IPTA. Look at this area here where only buy side in price was delivered. Now IPTA had to trade back into this void. If you look at it, it traded into this void even though it did not fill it. Or this is a BC here, this is a volume imbalance here, or a liquidity void. It had to trade back into this void, fill it halfway, and then took off from there. You can see it over and over in the chart. Let's look at the second example, or another example again. Look at this one here where only sell side was delivered. This is CB, okay, a volume imbalance. This is another CB here, a volume imbalance where only sell side was delivered. Look at how IPTA had to trade back over here to balance it up. You see this price action has been balanced. So this is the market efficiency paradigm, because we have a balance in price action. So IPTA is fair, okay, sell side must equate buy side. That's the job of IPTA. Now look at this scenario where only buy side was delivered. This is a liquidity void, okay, a buy side imbalance, a sell side inefficiency. What happened? IPTA had to offer the opposing liquidity, trading back to balance up this other side where only buy side was offered in price delivery. Now IPTA has to offer the opposing liquidity, which is what? Sell side, to balance up this price action. Market efficiency paradigm. You can go on and on and on and on, and you see a plethora of examples in the market. Okay, look at this other side where only sell side was delivered here. Okay, only sell side was delivered. This is a volume imbalance or a liquidity void. Now IPTA had to offer the opposing liquidity by trading back to balance this red candles here, this CB, sell side imbalance, buy side inefficiency. Now buy side has been offered to do what? To balance up the sell side that was only offered in the market in price delivery. So we can go on and on and on. So as a smart money concept trader, anytime you see a liquidity void in the market, what comes to your mind? Know that in future, IPTA will have to trade back into those areas to offer the opposing side of liquidity. Look at this area here where only buy side was delivered in price action. This is a BC here, okay, a liquidity void in buy side price delivery. Now IPTA had to sell back to balance up this BC, this liquidity void, buy side imbalance, sell side inefficiency. Now it offered the opposing liquidity, filled up this void here. Okay, so this becomes a balanced price range, and then when it is done, it is going to move away from here. Why? Because it has already accomplished its mission. You see how efficient it is in price delivery when we use an artificial intelligence. This cannot be done by binary pressure, please. It can only be done by a programmed language or an AI. Look at this area where only sell side was offered. You see, we had more sells here and less of buys. What happened? IPTA had to trade back to offer the opposing side of the market, balancing up all of this price delivery, which is just sell side here, more of sell side. Okay, now look at this other area here where IPTA only offered one-sided in price delivery, buy side. This is buy side in price delivery, okay, which means it was a buy side in price delivery, but it was not efficient in the opposing liquidity or in the opposite price delivery. Okay, more of buys was offered, less of sells was offered. So IPTA has to sell back to balance all of these buys here in order to form what? A market efficiency paradigm. So what was the hierarchy here? The hierarchy in institutional order flow was what? Buys and then sells. Okay, so whenever IPTA offers one-sidedness in price delivery, always anticipate that the opposing side will be offered in future, no matter how long it takes. In future, you are going to have the opposing side of price delivered so that the market should be efficiently delivered. So price action is efficient, very, very efficient, and this cannot be done by buying and pressure. This can only be done by a coded language, which is what? An artificial intelligence. We can go on, and you are going to see a plethora of examples on the chart. So I trust that you can go to your chart, look at those areas where only one sided, when you have very huge candles, just huge candles like here. You see, this is BC, this is volume imbalance here, or a liquidity void. It is void in what? It is void in sell side price delivery because only buys were offered. So IPTA will have to trade back into that area to balance it up. See, it trades back, it balances it up. Okay, so this is a balanced price range, and then it continues its normal direction. So you are going to see this over and over. Look at this area where only one candle was offered. This one, this is a volume imbalance here, or a liquidity void. Now IPTA will have to trade back in future into this to balance this up. Okay, market efficiency paradigm. Look at this area. This is what a liquidity void here where only buyer side was offered. IPTA will have to send price down, balance it up, and then continue its normal course. So go to your chart and study, and you are going to see a good number of them. Look at this one again. Here where only sell side price was delivered here. What happened? IPTA had to offer the opposing liquidity to balance it up here, and then what happened? It went down. Look at even here. Okay, this is a liquidity void here. Okay, where only sell side was delivered. Look at how IPTA traded back here, balances it up, and then continues downward. Even right here where only buys were offered, what happened? It trades back, balances it up, and then continues upward. So if you look at all of this area where only buys were offered here, look at how eventually IPTA comes down and balances it up. So this is a balanced price range here. Okay, this one here is a CB. Okay, this is a liquidity void here, a sell side imbalance, buy side inefficiency. So we are anticipating that IPTA in future will have to trade back over here to balance all of this sell side imbalance and buy side inefficiency before it will continue probably downward. Thank you so much. I hope you understand this. Just go to your charts and see if you can spot this. It's very easy. Thank you so very much. Thank you.